Okay, here we go.
Okay. Just pause me if I'm breaking up. So today we want to present you with a short update on Optify. We always start sort of with our reconnecting with our mission statement, which is to enable users to simply and automatically maximize returns on DeFi and NFT assets, given their risk preferences. Next screen, please. Yeah, so we always said that the status quo in DeFi and in NFTs is that if you are a power user, a DGen expert driver, you can get really good performance. But what we want is a chauffeur-driven experience, but with the power of a jet engine under the hood. Next screen, please. But the thing is that getting from here to there is not easy. It's hard work. And we thought it would be, but I guess we're learning it's even harder than we thought. And that's some of the learnings we're going to be sharing with you today. Can you guys hear me okay?
Yeah.
Yeah, it's fine.
Okay. So just first we're going to start with the update on yield. As you saw on the previous slide, we have yield and we have NFT vaults and other things upcoming, but right now the one we're live with is yield. And if you recall that our basic premise was that DeFi yield should be built from like the bottom up. So the DeFi pools, the pools themselves define the number of strategies, because if you have two pools, you can line them up. Token of one is input of the other. It forms a strategy, so it forms this universe of strategies. So that's kind of what we set out to test. We thought was a better way to do it because there's thousands and thousands of strategies possible, which nobody can just hard code and pick themselves. Next slide. So here's the progress we've made so far in big chunks. Number one, we launched our version 1 of our yield protocol on alpha in December, and then beta end of Jan, I guess. Thereafter, gas was a huge problem, so we set on fixing that, and we made our vaults much more gas efficient. It was a major upgrade of our main technology. Then we also undertook a major expansion. What do I mean by expansion? Expansion means adding protocol integrations, what we call adapters, and adding data feeds. So every time we add an adapter, we obviously need data from those pools. We can make a decision. And so we started this major effort because we have built this platform where really it's scalable to add all of these, which I'll show you in the next slide. What was the last point? You changed slides on me. Tuning the optimization engine and Dexim. Yeah, so that's sort of big things that I want to talk about. So let's go to the next page, please. So the progress we made on yield is that we did do this upgrade on vault efficiency, which reduced the cost for doing deposits by up to 80% for our users. So I think that was like our number one pain point for users who are depositing. It still is a pain point for users who are withdrawing on Ethereum, but that cannot be avoided just because they have to be withdrawing all the way out of the strategy if there's no money in the vault. But at least we got the fees for depositors down, and now we lump them together and sort of eat the cost of the putting them into the strategy. The second one is that we started like we started an aggressive expansion campaign in which we added like 30 protocols. So when I say 30 protocols, I count Curve, on Ethereum is different than on Polygon, et cetera, et cetera. We went on to 5 chains, 30 protocols, 800 pools. What do I mean? We built the adapters. We have mostly tested or almost completely tested those adapters. And that gives us access to like 800.
Voice just cut out there, Faisal, right at the end.
Maybe you can phone in with your cell, Fazil. It might work if you have Discord on your phone.
Oh, okay. Well, let me try this. Is this any better? This is my third connection. If this doesn't work, then I'll try calling in.
Yeah, this way. I can hear you well now, right now.
Okay. So I don't know where you lost me, but adapter and data feed expansion was that we've expanded to like 800 pools. Like in other words, we can run strategies potentially with 800 pools. However, the other half of it is identifying those best strategies. And that's where a lot of the hard work that we're going to talk about is coming in now. But in terms of optimization, we've improved our predictions. We've added costs to our model. So actually, how much is the cost to go into a strategy? What is the impact when you go into a strategy? So we've started building like the basic models for that. And then we've done some R&D on an advanced strategy optimization, which we call DEXSIM, which stands for DEX Simulator. So it actually simulates what a DEX is doing. So every hour we predict what it's going to do in the next hour. And our predictions hopefully over time get better and better. So we actually know the exact orders that are coming in. So we can predict prices much better. Next slide, please. Okay. But let's, the main focus today on yield side is to talk about the problems because everybody knows the other part of the story. Or, you know many of the other things, but let's talk about some of the problems. So one of the big problems we've encountered is closing the loop. This is what we call it internally, closing the loop. Closing the loop means that we have 800 pools, our back end, which stores obviously some data, our smart contracts, we can run those strategies, our optimization engine, which is trying to predict the best strategies, our subgraphs are getting data. Coordinating all of this is not an easy task. It's a lot of work. You gotta you have 4 different systems or 5 different systems coordinating each other, and we're just not there where we're very efficient yet. So that's been a challenge for us. So we're running optimization engine right now manually, and sometimes it's out of sync with the strategies we're able to run, and so forth. So we're trying to get, anyways, that's one of the big challenges. I'll tell you what we're doing to address it. Number 2 is curve is damn complex for anybody who's kind of really dug into it. But the problem is you can't live without it, especially if you're in stables. So you have slippages, you have swap fees, which are not disclosed. You have to kind of read in the code and find them. You have impermanent loss, even though it's stable to stable. There's sometimes significant impermanent loss because not all stables are equal, which I'll show you. Automating the optimization engine. That's another pain point because, again, it really needs to model a lot of detail, a lot of intricate detail. And we're just not confident in it automatically changing strategy. So it's still, we're getting prompts from the optimization engine and then changing strategies. But that's still a pain point. Okay. And then reward claiming harvesting. We have a small size vault. We want to keep it small because it's a beta vault. So claiming rewards is expensive on Ethereum. And sometimes you kind of want the rewards you're claiming to be at a good price before you harvest them. So it's a tough call, but I think the lesson we've learned is we need to claim them more frequently than we have been doing so far. And not try to wait for appreciation in the token or anything like that. So that's why the first harvest, we did take a while. But at the same time, what I'd like to say is we always said that our protocol rewards patient capital. So those of you who ended up staying in got the benefit of the harvest. But yeah, I actually want to show some graphs on my side. So let me try to take the screen, Curtis, so I can show some of these things which I'm talking about.
Sure.
Now that I have a hopefully decent connection.
You've been clear so far since changing the connection.
Cool. So one of the questions that come up, okay, so some people noticed price dropping recently in the USDC vault. Okay, so what I'd like to show you what that means is, yeah, that's our USDC vault. Now, this is the price per share. So you can say this is the growth of the vault. And yes, it's not very pretty. But again, one thing I'd like to stress, this is a beta vault. And the key thing about beta is the second word of beta, which is beta testing. And that's what we're doing. We're trying to improve our optimization engine. So we cannot promise it's going to be, like, we're not here promising you extreme, like, superior results to the industry. We're not there yet. We're building a platform that hopefully can do that over time. And it's kind of like, if you build it slowly, it can scale really fast. So we're in that build slowly phase. So what you see here, especially like in the initial times, is what you're seeing is sort of some early, the upgrade and some, some things like that. So that's a little bit of noise. I think some of this is what happened is we were removing gas fees every time we did a rebalance. And then we were trying to restock them. So there's some bumps there. But pretty much from here, we kind of have a steady growth. And then we have some turbulence here. What happened is our strategy that we were in had recommended the USDN curve pool, which was doing quite good. But what happened with USDN is there was a USDN is a stable coin that's backed by waves. And what happened is that wave price started to shoot up. And this was not really caught by our, well, we sort of knew about it, but we were not as quickly able to react to it as we should. So what happened is the waves behind so it's waves is like, USDN is like DAI, and waves is the collateral, which is the ETH behind it, right? So waves price started going up, so people started minting a lot of USDN. So there was like this huge supply of USDN in the market. But then what happened when waves price crashed, the USDN was no longer backed by collateral, so then there was a sell-off. So you see, this is the curve USDN pool. So even as a stable pool, you can see what happened here. And fortunately, like, we got out about here. So we didn't catch this part of it, but we got out pretty quickly. But still, we have a lot to improve in that, which I'll also talk about. Curve BIM pool is much more stable. So we've started analyzing pools much more closely now as a result of this. So yeah, the main point is that as far as the ETH, this is our ETH vault. This has gone pretty, no big collapse or surprise in ETH. The only thing is this harvest could have been maybe done in 2 chunks. We were just trying to optimize gas as much as possible, but maybe we should have just, done it a bit earlier. I don't think we wasted. We would still be up here at this point. It's just that it'll have been a few different jumps to get here, not here. So I get it that some people exited here right before this, and they're not happy. I get that, but we're going to be improving our optimization model as well. Curtis, I'll try to take the slide over as well. It's okay.
Yeah, everything's going well now.
Cool. Okay. So yeah, so that was those are the 4 problems with yield I talked about. And then here's what we're doing immediately, like right now. Number 1, we've actually stopped doing integrations. Those 800 pools I talked about, we've actually stopped integrating more. And we're focusing on streamlining our operations. What does streamlining mean? Like more closely monitoring. Well, streamlining means getting like backend and the integrate optimization engine, smart contracts, all of those to work together. And we're trying to do that on a smaller set of strategies, smaller set of pools. we're trying to improve the optimization engine and eventually automate it. We're not there where we're still confident with it automatically changing the strategies, but it's going to prompt us. We're focused on better modeling of a handful of strategies instead of trying to model everything. And part of that is, in order to estimate costs, it's quite difficult to theoretically estimate the cost of going into a strategy. Slippage, gas fees, all that. So we've now come up with a model where we actually are looking at we do a fork of the blockchain, and we actually run the strategy, and we see the actual cost, and we'll be using that in our model. So that's something we've already started doing. We're also more closely monitoring our vaults. Just to give you an idea, what that looks like is our team monitors on a regular basis these burns, mints, change in price. We also detect every time there's a small change of price in the price per share of our vault. It's actually normal. It's not unnormal, because in the end, Curve is a multi-asset pool. It's a stable pool. But what should be happening is that should be correcting. As you can see, the differential is way bigger in the positives. The negatives have occasionally, and then they revert back. That's what's called impermanent loss. So the worst thing a user can do somehow is, jump. It's not really bad because it's stable. You can see these numbers are the negatives are way smaller than the positives. However, at points, like I had shown you, this graph of our is going to go down, like this dip. It could be a small, but it's going to revert back. The thing is, don't get out on this part of it if you're sure of the coin. If you think it's a meltdown, like this USDN thing, then yeah, it may be a good idea to get them. So that's one of the things we're trying to distinguish in our optimization engine. Closer monitoring of vaults and strategies, and then more frequent harvesting, and especially on lower cost chains like Polygon. Now, we haven't announced our Polygon launch yet, but I can let you know if somebody goes to app.optifi, opti.fi/Polygon, they'll see something there. But it's not official and nobody will get in, so there's no point. But internally, we are already testing on Polygon. We'll be having an announcement soon, but we're not going to announce it until it's like 100% ready to go. Short term. That's immediate. We've already taken those actions. These are what we're planning to do in the near future. We're adding the ability to have multiple strategies running at the same time. So now, if you do have a situation like the mempool in Curve, where you have these dips, right? Well, if you have 4 of them, those 4 dips will not occur at the same time. So, this will be only a quarter as bad as it is. And hopefully, the slope up will be more consistent across 4 of them. And then at random points, the downs in some will trade off with the ups in the others. So again, diversification is one of your best friends, as long as the pools are not correlated. So, MIM versus UST. Hopefully, MIM and UST are not highly correlated in terms of FUD, right? Like in terms of FUD, hopefully, if people, if the CT goes against UST, not MIM at the same time. That's kind of what it boils down to in the end. More advanced pair strategies. So we're really excited about. Still sort of in our R&D phase, but we are getting quite good results. We have a new quant on board, Carlos. I think he is in the crowd today. I think I saw him. Anyways, if you're there, you can say hi, Carlos. So he's on our team. He's experienced quant engineer and DeFi degen. So he's helping us testing some of our advanced strategies, just to show you what we do when we test strategies. So this is an example of us testing just one strategy, which is going into the USDC ETH pool. This is an advanced strategy. It has impermanent loss. It's not stable to stable. This shows you we train it from data starting on the 1st of Jan till the 25th of September. And then we test it for 30 days. And we test like thousands and thousands of possibilities, right? Because what we're doing is we're doing simulations. And we try different parameters. And as you can see, the greener it is, the more profitable. So this one, we can see our 24-hour rebalance model is working quite well. Like this is for 30 days, right? So if it's 6% in 30 days, that's 12 times 6. That's 72% annualized. But yeah, we're not still confident enough. There's still too many reds in here for our liking. So until we get this very green and almost no reds, we're not going to be deploying these strategies. But this is just some of the cool stuff that will be coming down the pipe. That's what I mean when I say more advanced pair strategies. That's when you'll see our vault's APYs really shine. And that's unreal. That's not even the rewards portion. The reward should like take it through the roof, but that's going to be a solid base compared to other single asset strategies you have. We also, I think I told you we have a lot of these really ready. Like once we have closed that loop that I talked about where everything talks to each other, we can really expand quickly because we've been building all of these adapters. Again, just to give you an idea, what we do for the adapters is that yeah. So just to give you an idea, we have actually protocol integration process that we've developed. That was also a learning process, right? So we actually have a process where we have like 6 steps. Analyze the protocol, do technical research, define the MVP, get the pool data. And I think we actually, like from adding protocols, we became quite good at that. If you actually look at what we have right now, adapters, if we have them here. We always get lost in our Confluence as well. But anyways, we have here's some of the protocols we've integrated. I had a nice list of them. I apologize. Yeah, there we go. So yeah, here's like just so you guys know, we're not doing anything. If you don't find us on Discord all the time, we're doing some work. So we have all of these adapters deployed. Adapters means we can basically interact with these protocols on Ethereum. We've decided not to go forward with these for various reasons. These are the data feeds we've built on Polygon. A lot of these are integration testing, but they're pretty much ready. We've already deployed the Curve ones, actually. So, but we're also ready for Polygon subgraphs, Avalanche adapters in process. So just so you know, we have a lot of work. So once we get this loop closed and efficient, we'll really be able to expand quickly. So please do not lose patience with us. There's a lot of work going on in the background. It's kind of like, build slowly so you can scale quickly. It's kind of what's happening. And then I wanted to take this opportunity to talk to you about the next type of vault we are considering launching. And if it's something that you guys like, please reach out to us. We're looking for community feedback. We really want to take your feedback before we, sort of launch a new vault. The idea for this vault is, it's kind of based on our research. Usually, when you have staking, you have 2 different opportunities to stake. I'll just share the diagram. So usually, let's say you're a NEO token holder, right? Usually, you have 2 opportunities. You can stake it single-sided and just stake the NEO and earn some returns, or you can put it into NEO USDSP and get even more returns. But as a user, you actually don't know which one is better. You don't know if it's better to single-sided stake, or is it better to stake in the LP? Often the LP is giving you much higher returns. At the same time, you've always heard about impermanent loss, so you don't want to do it. So we're building a vault that's going to basically, you can park your NEO into it, and then go to sleep. Because what it will do, or new or different type of tokens, it'll do is it'll switch between these two optimally. And we've done the research. Our results, our algorithm will give you better results than if you just parked it in single-sided staking or in the LP staking. If you did one or the other, our algorithm does better for NUO itself. Again, this is an under development thing. I'll show you sort of our results on that. So here's an example. So this is specifically for the NUO token. So in NUO, you have two options. You could single-sided stake it, or you can put it in the sushi LP, right? If you were to single-sided stake it over a 4-month period, your returns would be minus 55%. If you were to LP stake it, it's 58%. Although people are scared of the LP because they think impermanent loss, in this case, you would have done better if you did that. But again, it's complex. It's not easy to understand impermanent loss. But if you had put in our vault, you would have done 85%. So this is a product we're thinking of. It's not a product we have to build much. It's more about this is the type of vault we want to launch because we already have the underlying technology to do it. And to give you an idea what it would look like is you just any token, whichever token has different staking options, you would have your vault paid. You could park your funds into it. For example, in this case, exactly 25,000 UO. You're making this huge, crazy APR. All right, but then what your real question is, how much am I making in US dollars, right? And that should be just right apparent to you right away. And that's what we're going to show you because we know that users, they don't just care about the number of NUO they have, they actually care about the US dollar value of the NUO they have. And a lot of platforms don't give you this growth number. And the third thing we want to do, this is down the road. So this is again, like this is the full roadmap. I have the full functionality, but okay, I'll hold NUO until it hits a certain price, but then I'd like to be exited. Okay, we think that's fair. We think a user just shouldn't have to be sitting on their computer all day. I mean, that's what we're supposed to do. That's what we do. So we have these systems of different, we monitor the vault, we monitor the prices very closely. So you'd have some position. So you'd put your funds in. I'm in NUO as long as the price is above this. If it's not, then exit me this much quantity. You can kind of dollar cost average yourself out as well. Eventually, these vaults would look like something like this. You just go into a bunch of vaults and you can say, I'll put 25K here, 10K here, 5K here, and you guys just make sure they're optimized fully. And what we'll do is we'll make sure you do better, whether it's in the single-side staking, whether it's in the LP staking, we'll between those two, and we'll make sure you'll do better than rather if you did it into one of those two options yourself. And then also, if we have that stop loss, then you can just say, park my funds in here, and then just exit me when I get to this point. So then you can actually just, do some kind of like worry-free, stress-free staking. So that's what the goal of such a vault would be. However, we're not going to launch it until we get really strong feedback from the community. So right now we're looking for some in-depth discussions with users. Emika, our product manager, is. So if you can please get in touch with us if you're interested in helping us. There's going to be bounties and rewards, obviously. But this we feel could be a good product for users. But we're not the users. You guys are. Please get in touch with us and give us your feedback. Okay, so that's a small pitch for a new type of vault in the near future. So that's it. That's Yield. I'm going to break for questions if there are any.
So Daniel is saying that he would definitely park his NUO on that vault.
Actually,
Good.
my only question on that is if I commit my NUO tokens to Optifi, but NUO then runs a vote, would I still be able to vote with my tokens in Optifi, or would I have to pull them out for the vote?
No, we want to talk to NUO to do that. We want them to accept because I think it's beneficial for them. This will take some work. So yes, we hope they will accept the vault tokens of NUO. as for voting. But this is going to take some work. So we think this is going to be on the one side beneficial users, on the other side beneficial for the DAOs as well. But that's why we're actually hoping to build one with Nuo. But we've had to have this conversation with them. We hope that, like, we get it. A big part of what you're doing is governance, and we want that. But that's our objective. We don't want to be, we definitely, yeah. That's the short answer. That's a long answer to your question.
Awesome. Thank you. You guys will do it.
Yeah. Thank you. What I'll share, let's just at the end of this presentation, I'm going to show you Vault token locks, which are a way to lock your tokens in for long term and boost your rewards. That I think will be perfect for these staking vaults, because then you can say, okay, I'm willing to lock in my Nuo for a year, and still make a boost on the token itself, on the yield, but at the same time also have a breakup fee, so also have a stop loss. So I think that product now for Nuo, they know their Nuo token is locked in for like a year. It's kind of like having this VE vote escrow lock system, but flexibly, where you can kind of get out of it with a financial penalty and so forth. But we hope what this product lets DAOs do is pay less. Like, they don't have to pay so much. So what happened in this example I showed you, the reason they made 58% is they gave a lot of rewards for LPs. So sometimes they have to attract LPs. They're over emitting. They actually don't have good control over how much to give each pool. So what we're hoping is we make the market efficient. They actually know the exact whatever balance they want in each side on their single staking or dual. They can control it better, via OptyFi vaults. So we're hoping they'll work closely with us. But yeah, if you have any feedback, we'd love to get you see in something like this. And like you pointed out well that the governance aspect.
Thank you.
You're welcome. Okay, so that's yield. That is that's 90% of my headache at Optify right now, because it's a live product. State of NFT vaults, we have no problems to report because we're not live yet. But have plans, and that's I'm not gonna go into details of how the actual vaults work, because I think that'll be covered. The NFT vaults that are coming up are work, but I'm just gonna go over a specific vault that are coming up. The first vaults we're gonna launch are gonna be CryptoPunk and a Bored Ape Yacht Club vault, just because the asset. So we're going to buy probably one or two assets of each in the vault. We're looking for a non-floor, like we're not looking for a floor on them. We're looking for a value buy using our machine learning algorithm. David has a really good presentation on how we go about finding value in the market using analytics. So we kind of use, what is it called? We're quantamental. So we have like a quant algorithm that shortlists them. And then we have some fundamentalist human analysis on top of that to give a sanity check to it. Capital raised for each vault will be, 75 to 150 ETH. That's a typo. And what we're planning to do is give Opti rewards to that vault as well. So depending, so that's on your ETH. It's an ETH investment. If Opti is $100 million value, which in a year from now, which we think is extremely pessimistic, we can actually raise money from VCs at that price. So we know they're not raising at market price. So yeah, if Opti is at $1 or 100 million valuation, that would be a 20% yield on ETH, not bad. But if Opti hits $10, which we think is, I think it's more reasonable for us in the long term. That's 150% APR. Of course, your vault token is backed by Punk, the Bored Ape Yacht Club NFT, which are the most valuable NFTs in the NFT industry, I guess, or arguably in the collectible sector. And so your vault assets are backed by that. if you expect appreciation on that. And the biggest thing is, like, if you can't afford one of those, right? And unfortunately, that's still my case. So I'll be buying some vault tokens as well. At least I can park crypto. We'll cover on another day the mechanics of it, unless there's questions of how the vaults work, et cetera, et cetera. I would like to show you our vaults pipeline. So the good thing about vaults is our tech, I would say, is 95% done. So it's not as there's not as many moving parts as in the yield, right? Because that's very automated. This one still has a human factor, which is strategists and portfolio managers. But we have the quant overlay. We're hoping other strategists will come and compete with us, and there'll be a true decentralized, like, strategist market of strategists deploying these assets. But this is what's happening in the short term. So we have the CryptoPunk, Bored Ape Yacht Club, both on Ethereum. The theme is art. These are single asset type of punks. So we're allowing one asset to be owned by the vault just because blue chip of the blue chip. Our strategy is HODL and arbitrage. The reason I say arbitrage is because we are trying to look for value, but not necessarily like a quick flip. Not necessarily. The decisions the vaults will make will be sort of a combination of the vault token owners and the Opti community. We want those to balance each other. We don't want a case where, you know, somebody like a 51% owner of the vault basically does something, you know, wrong with the assets of the other. So we're going to have the Opti token holders as part of the governance as well. But what that means is we may say the investment period is like 12 months, but if we see an opportunity to sell it earlier and the community and the community wants it, and by community I mean the Opti stakeholders as well as the vault token holders, we can change that. So it's a flexible model because we're just learning how it works. But then after that, in quick succession, we want to be launching art, gaming, land, music, and then special interests. There's some very strong women-led projects in NFTs. We're hoping to have something of that nature, so you can actually invest in causes that you. And then we have different strategies for these, right? For some of these. Arbitrage, quant ML. If you're good at picking NFTs, we'd love to talk to you. You can get a share of the profits of the vault. As you can see, there's some fees, so you can share in the profit share, etc. These are all under discussion right now. You can see the strategist comp here would be like 40% of the profit share. So there's a lot of funds if you're good at picking, you know, if you have all day NFTs, scour the markets for our users, then you can benefit from the upside of your picks. We also want to develop a DAO themed vault. So let's say there is partnerships, like we feel projects like, you know, take an example of Lazy Lions. They have their floor price is still unattainable for users. We could have a Lion specific vault down the road that just buys, you know, the best value in Lions and sort of helps the project because we are like a whale now, who's a long-term holder in the project. So we feel a lot of good dynamics coming out of it, but it all goes back to our mission to let people, let our users just, you know, sit back and let us do the work in trying to, increase the size of their DeFi assets. I know this is running long, but I'm gonna wrap up soon. State of the Opti token, which is a question you guys have. So yeah, I told you we've been working on this liquidity locks. That is, that's quite maturely under development right now. But the idea is you have a USDC vault token, you agree to lock it in, let's say for 6 months, a year, 18 months, or 2 years, and then you're rewarded Opti tokens. Now you actually you're getting the benefit of the yield You're getting the benefit of the rewards, which are by other protocols, but then you're getting the Opti on top of it. But the Opti is coming in a
Just cut out for me. Not sure if that's just me.
earning a 75%, plus your APY, which should be at least 15 to 20%. So you should be earning like, very good yield on your just a stable coin for your long-term commitment to Opti. Of course, we're not to lock it in; it's gone. There's a breakup fee. The breakup fee is asymmetric. So yeah, if you break up, there's a small fee. You just lose the potential upside of breaking up. And these vault tokens are also liquid, so they are transferable.
Once again, Faisal.
I think we lost you again, Faisal.
Yeah.
It was great the whole time up until then.
I think give me a second. Can you hear me now?
Yep, now you're back.
Okay, so I hope this goes well. On my devices. Okay, just tell me if the connection is bad, but I'm almost done. So, all right. The last question was, I guess, when token? And we're probably looking at 2 to 3 months. We are focused on the product a lot right now. We want a product that shines, not just like we don't want to be where we are. So to be honest, our like 99% of our focus is the product. So the Opti token has been put on a slight hold until we do have some of this urgent stuff under control. Also, we want the locks ready so that when we sell the token, those who are willing to commit long term will have more benefits, and we don't want dumping as well, right? So we're looking at 2 to 3 months, but we're not making any commitments, okay? And we may also surprise you if it's earlier, and it'll be the surprise on Discord first. So stay in touch. And that's all that's all I have. Any questions at all? Anything? Any of the recent price fluctuations on vault tokens? Anything like that? Would love to take them.
Let's see, there are some users writing on the community events chat. Ready players agrees, build first, token later.
Thank you.
One quick question I have, Faisal. Sean here. You mentioned that the NFT strategist decision would be kind of balanced between the people that are involved with that NFT vault specifically, and offset by the Opti token holders in terms of governance. So given that there's the NFT vaults possibly before the Opti is launched, maybe you just want to touch on how that balance is going to work. So,
It's like, the Opti not launching, we're doing a lot of workarounds. Like, for example, we're rewarding retroactive Opti on the current yield vaults. We'll be promising Opti on the NFT vaults as well. And then as soon as the vault launches, we provide them. In terms of the first, we're really going to have to play it by ear. I think it's going to have to be a combination of the vault token holders voting and OptyFi team having some type, preventing any kind of malicious acts, I think. For example, one of the things we're planning to do is to have the decision of the actual punk So we have some quant, and David will demo that to you next time. So we have identified, let's say, we would identify a short list of 4 to 5. Then internally we would review them, and we would say, okay, these are all good, these are legit, and like the vault token holders to do like a snapshot vote and vote for it. So until we have the token out, we're going to have to kind of be in this gray area until we're like, proper DAO. Yeah, so that's a good question. So the first 2 vaults definitely will be sort of played by the ear, but we'll do our best to make sure it's fair. But yeah, it is a little bit centralized until it's decentralized. Put it another way.
So, Faisal, there's another question from a community member asking what happens on the NFT vaults if price dips, right? So if market crashes and so on.
Well, okay, so if price dips on punks and we own a punk, then our price dips and we made a loss. So that is like, there's no sugarcoating that. However, let's talk, like we will try our best, obviously, not to go into stuff that'll crash, like really crappy projects. And number 2 is we do have flexibility how long to hold. So we cannot control the price, but we can control how long to hold. And for everybody who is like, like we're not be forced to sell. So right now we have a vault that is 1 year. That's our timeline. Assuming the prices go really far up, and there's a lot of discussion in our discourse, that's why we really want like the people who know NFTs, and we think this is a top, we could sell early. On the same token, no pun intended, is at the end of 1 year, there's a down market. But we know NFTs are long-term bullish, but just happens to be some FUD on something. Like Elon Musk just said something bad about CryptoPunks. I don't know, whatever, right? So there'll be 2 decisions. One decision will be that, okay, let's extend the period of hold. The other one will be, and some vault holders might say, okay, you guys really want to, so have them want to dump it. Let's say half of them say, hey, I want to dump it, I want out, whatever. Then another half can say, hey, you know what? We want to buy it. If you're going to dump it at like 75% value, we'll buy it from you at 85% value. Okay? So that can happen. Now, let's talk about something that's not like at the forefront of our minds, but there's speculation. So just imagine we have this new punk, right, that we identify. I think it'll be the first one that's actually identified through using some deep data science, right? And we go buy the punk, the first one, right, for, I don't know, 500K. Now, once it's off the market, nobody knows its value. But guess what? The vault token holders have vault tokens. And we're going to be setting up a market for those vault tokens. So there'll be a Punk 1 USDC pool on Sushi. So let's say you invested 1 ETH. We went and bought the Punk for, I don't know, 100 ETH, right? So you're like 1% of that, whatever.
As a right when you said 1% of ownership of the vault and started that out.
How is it now?
A little bit better, yep.
I'm just gonna switch connections 1 second. Okay, I'll try to wrap it up, but the point is that your vault token on day 1 will probably have a premium. That's what I believe. I could be 100% wrong. And expertise, and that punk is no longer available, and now a fraction of that punk is available. I think your 1 ETH token should be worth something more on like the on the Sushi swap market. So if you're a speculator, and plus it comes with Opti tokens, right? So if you're a speculator, you could actually, probably sell that 1 ETH vault for maybe, I don't know, 1.1 whatever the market is crazy, we know that. So if you want to speculate on it, there's always going to be a liquid opportunity. Well, we hope there will be a liquid opportunity if the world believes we're selecting good assets, right? And on the downside, yeah, you won't be locked in for the whole period. You'll always be able to find a buyer at some price, but you won't have to look for a buyer who has 500K. You have to look for a buyer who has $1. Well, not on Ethereum, sorry, at least like maybe $1,000. So you could sell your vault tokens and exit earlier.
Just a comment on the subject. We recently published an EMA we did last week here on Discord, and there are like frequent asked questions about the NFT vaults on that recap. Sean just shared the link on the community events chat, so please take a look. You'll find most of answers about the NFT vaults on that article.